As mortgage deals continue to be pulled from the market, interest rates are rising at the fastest pace since Liz Truss's mini-budget last autumn, which caused chaos at the time,
didn't it? Yeah, the average interest on a two-year fixed mortgage is now almost 6%, which makes the monthly payments on a £200,000 mortgage repaid over 25 years more than £1,200.
So this is up from 3.25% a year ago, when the same monthly payment would have been £972.
Yeah, 2 years ago it would have been around £900, or 2 years previously. Yeah, this means that in just 2 years, people could be paying over £4,000 more per year.
Goodness me. Well, we're joined by mortgage and property expert Teo Oguntunade. It's great to have you here, because it feels at the moment like there isn't any way that the individual can find anything better, because the deals that look good are being pulled, the rates are going up. What are the options for people, first of all, before we look at what the government might do?
So it's really tricky right now. And as you mentioned, the everyday person, the individual, there's over 700,000 people that are coming off their fixed rate this year. And as we saw in the example, that means that it could be a jump in a monthly payment of £372. And you kind of wonder, where is the everyday person going to get that money from? I think the first thing for a lot of people to do is look at your finances. There's two things you can do when mortgage payments go up. Either try and reduce your outgoings or increase your income. If you know that you're struggling to pay, you're going to struggle to pay, be proactive and speak to your mortgage lender. Sometimes they do have options, things like mortgage payment holidays. You could explore options like interest-only, short-term options, or things like increasing the mortgage term of your mortgage, which will bring payments down a little bit.
Right. So, look, some of the things that could be done or have been floated as an idea is, for instance, if you're on a repayment mortgage, that can tend to be a higher monthly because you're paying off some of the actual cost, flipping to interest only temporarily. But there can be penalties for doing that, can't there?
Yeah, because if you go to interest only temporarily, and it's good you said temporarily because it's only a short-term fix. The reason being is that while you're on interest only, you're not paying down any of the balance that you owe. No. And what you don't want to do, you don't want to end up doing that for 10 years, getting comfortable doing that for 15 years, and then by the time you get to the end of your mortgage term, you've got a huge lump sum that you need to find some money to pay down. So interest only temporarily can work, and it can help people get their finances in order, lower the payments temporarily, but you will need to go back onto a capital repayment to ensure that mortgage gets paid off.
If it's temporarily, you're right, because people don't want to have to sell their home, do they?
Exactly.
One of the arguments can be, though, that if it gets your finances in order, it means that you don't end up losing your home, which some people fear. Then at least, even if you don't get your bulk payments down, you're in a position to at least sell your home and potentially move somewhere else cheaper.
Absolutely. I think that what a lot of people need to realise is that the Bank of England's base rate was below 1% for over 10 years, effectively. What we're experiencing now is a massive shock. In the last 18 months, it's gone from 1% to 4.5%, well, below 1% to 4.5%, and looks like it could be going higher. So it is a prudent approach to take a short-term fix while this has happened so quickly over a short period of time. So going on interest only could help in the short term, but you'll definitely be looking to get your finances in order in that period and then go back onto capital repayment.
If there are people that are looking to fix, I know we're concentrating on the homeowners at the moment, then we will come on to renters too, because it's going to affect them as well. If there are people looking to fix, how long should they be fixing for, Teo? Because no one wants to be fixed in for 5 years when in 2 years' time, inflation comes down, interest rates start dropping, and then you suddenly realise you're fixed in at a ridiculously high rate.
It's a really tricky one because no one really has a crystal ball. We don't know how high these rates will get and how long they will stay high. And a lot of the time, it depends on what the 2-year deals are and what the 5-year deals are. What I'd say to people is that being proactive is the best thing you can do. I like to give my example because sometimes it makes things more tangible. So my mortgage deal is actually expiring in November. I did a product switch and got a mortgage offer which came to my house yesterday. And that tells me, look, you can take this mortgage at 4.58%, and that will be your mortgage for 2 years. Now, I don't actually have to sign that and send that back to the mortgage lender. I can hold on to that mortgage offer because it's valid until December. And what I can then do is now wait to see if mortgage rates do cool down in the meantime. So people can look into options today and just be a bit more proactive.
So once you have the offer, that is concrete?
That is concrete, yes.
So you've got that offer and then you can shop around. What about renters? Because, of course, they haven't got the investment in the home, they can't sell it, but they have emotional investment in their home and they're facing increasing costs.
Absolutely. No one wants to be uprooted from their homes, and renters may have support systems in the area. They may have a reason to be in that area. And when interest rates go up, it goes up for institutional landlords and individual landlords. It increases the cost of borrowing, and a lot of the time that cost is passed on to the renter in increased rents. Sometimes it may mean that the landlords have to sell the property or change the use of the property, but that affects renters as well because it reduces the rental stock, which effectively also brings the price up. So renters are could potentially be in a bit of trouble as well. What I'd say to renters is, once again, have a look at if that rent is going to be affordable or not. If you know it's not going to be affordable and your rent has been increased, speak to your landlord and see if you can negotiate. That's what a lot of people don't do. They may just try and not pay the rent, and then it ends up becoming arrears and so on and so forth. Let your landlord know that you can't pay it and see if you can negotiate.
OK, Teo, thank you. Some tangible thoughts
you,
there. It's just pretty bleak, isn't it? That's the problem that we have.
Yeah.
And it feels like the government, you know, at the moment, there's lots going on, but we need them to focus on this and try and help.
Absolutely, absolutely. There's something that needs to be done.
Teo, thanks for joining us.
Thank you.